Hi, my name is Alex Carlucci with Gustan Cho Associates. Going to talk to you about self-employed income, and I'm not going to show you how to calculate it because it's complex, but I'm going to give you an idea how the underwriters will look at self-employed income. Let's just start with, let's say you own your own business. They're going to look at your tax returns, and they're going to look at, it depends how you do your taxes. If it's an S corp, there's going to be a K1 that you're going to carry over to your personal returns. But let's just say you think you make 100 grand a year gross, but then you have all these expenses on your taxes that you write off, and you only show the IRS adjusted gross income of 20,000. That's your income the underwriter is going to use, not the 100,000. They're going to use the 20,000 adjusted gross. So to keep things simple, what they're going to do is they're going to take 2017 and 2018, because right now we're in 2019. So you're going to take the last 2 years, and they're going to average the tax returns adjusted gross. If your income is increasing on the adjusted gross, then we just average it. If it's decreasing by more than 10%, it becomes a problem. More than 20% underwriters can actually just not even use it. They may just go off the lower income. But if it looks like your business is going out of business, so if you're making 200,000 in 17 and now you're making 10 in 2019 or 2018, you're not going to use anything. Let's say you made 500,000 in 2017 and you're making only 100,000 in 2018. They still may not even use the 100,000. They may say your business looks like it's going out of business, or they might pull into 2016 to see if the 100,000 is just an anomaly, or if they'll let you explain things, but it gets real complicated with the self-employed income, so keep that in mind. Now, when it comes to Schedule E income, that's when you have investment properties on your tax returns. They use a certain weird formula where they're going to not count the mortgage payment. They're going to go off your net loss or profit you show in your Schedule E, and most of you guys will show a loss. And what the good news is, you get to add back the depreciation. There's a little line on Schedule E that has depreciation on it. You get to add that back. Hopefully it turns it positive for you. So self-employment income, I don't leave it up to you guys to decide what we're going to use. That's why you need us to help you calculate what they're going to use for income. So please don't think that you make 100,000. Don't tell us that you make 100,000. Really look at your adjusted gross. The underwriters are going to terrorize this. There's no way around it. Now, there is a way around it. If let's just say you make $1 million a year, but you only show $10,000 a year, we have what are called non-QM loans. So the non-QM loans allow you to use bank statements, or if you're buying investment property, we can use the rental income just to qualify you for the mortgage payment. So we don't even look at any income at all. They just, as long as the mortgage payment's covered by the rental, we can do a stated income loan, or not even stated, just no income. So the bank statement program will average 12 months, and then we can do a blended, some W-2, some bank statement programs for self-employed people. So if you have a W-2 job and a self-employed, they'll take the bank statements and the W-2 and blend those incomes. So you have an option if you don't show income on your taxes, but if you do, you have to average it, and give us a call. We'll help you with your income. We got all sorts of solutions for you. Go to GustanCho.com or call me, Alex Carlucci, 630-915-7550. Thank you.